Question 1. What distinguishes a term life insurance policy from universal and whole life insurance policies in Florida? A. Term life insurance provides coverage for a specific period of time, such as 10 or 20 years, and typically offers lower premiums compared to universal and whole life policies. B. Universal life insurance policies offer flexible premiums and death benefits, allowing policyholders to adjust their coverage and payments over time. C. Whole life insurance policies provide coverage for the insured's entire life and include a cash value component that grows over time. D. All of the above. The correct answer, A. Term life insurance provides coverage for a specific period of time, such as 10 or 20 years, and typically offers lower premiums compared to universal and whole life policies. Explanation. In Florida, term life insurance policies are characterized by their fixed coverage duration, making them suitable for covering temporary needs such as mortgage payments or income replacement during specific periods. They generally have lower initial premiums, making them more affordable for younger individuals. Universal life insurance policies, on the other hand, are known for their flexibility, allowing policyholders to adjust their premiums and coverage amounts. Whole life insurance policies offer coverage for the insured's entire life and accumulate cash value over time, which can be borrowed against or withdrawn. Understanding these distinctions is crucial for agents selling life insurance in Florida, as it helps match the right policy to the customer's needs and financial situation. Question 2. How do universal life insurance policies differ from whole life insurance policies in Florida? A. Universal life insurance policies offer flexibility in premium payments and death benefits, whereas whole life policies have fixed premiums and coverage for life. B. Whole life insurance policies have a guaranteed cash value component that grows over time, while universal life policies' cash value depends on market performance. C. Universal life policies allow policyholders to adjust death benefits, whereas whole life policies provide fixed death benefits. D. All of the above. The correct answer, A. Universal life insurance policies offer flexibility in premium payments and death benefits, whereas whole life policies have fixed premiums and coverage for life. Explanation. In Florida, universal life insurance policies provide policyholders with flexibility in premium payments and death benefits, allowing adjustments as needed over time. This flexibility can be advantageous for individuals whose financial situations may change. In contrast, whole life insurance policies offer fixed premiums and coverage for the insured's entire life, with a guaranteed cash value component that grows steadily over time. Understanding these differences is essential for insurance agents in Florida when recommending suitable policies to clients based on their financial goals and circumstances. Question 3. What are the key features of whole life insurance policies that make them distinct from term and universal life insurance policies in Florida? A. Whole life insurance policies provide coverage for the insured's entire life and accumulate cash value over time. B. Term life insurance policies offer coverage for a specific period with no cash value accumulation. C. Whole life policies have fixed premiums and death benefits, unlike universal life policies that offer flexibility in payments and benefits. D. All of the above. The correct answer, A. Whole life insurance policies provide coverage for the insured's entire life and accumulate cash value over time. Explanation. Whole life insurance policies in Florida are designed to provide coverage for the insured's entire lifetime, as long as premiums are paid. They also feature a cash value component that grows over time and can be accessed through loans or withdrawals. This cash value provides a savings element that is absent in term life insurance policies, which offer only death benefits without cash value accumulation. Additionally, whole life policies have fixed premiums and death benefits, providing predictability and stability for policyholders. Insurance agents in Florida should emphasize these features to clients seeking lifelong coverage and potential financial benefits through their life insurance policy. Question 4. What distinguishes variable life insurance policies from other types of life insurance policies in Florida? A. Variable life insurance policies provide a cash value component that can be invested in separate accounts, offering potential for higher returns but also subjecting the policyholder to investment risks. B. Final expense insurance policies are specifically designed to cover funeral and burial expenses, providing a fixed death benefit to the beneficiary. C. Accidental death benefit riders can be added to a life insurance policy to provide additional benefits if the insured's death is due to an accident. D. All of the above. The correct answer, A. Variable life insurance policies provide a cash value component that can be invested in separate accounts, offering potential for higher returns but also subjecting the policyholder to investment risks. Explanation. In Florida, variable life insurance policies are unique because they offer a cash value component that can be allocated into separate investment accounts, such as mutual funds. This gives policyholders the potential for higher returns based on market performance. However, unlike other traditional life insurance policies, the cash value in variable life insurance is subject to investment risks and may fluctuate depending on market conditions. Policyholders must understand the investment aspect and associated risks before purchasing such policies. This differentiation is crucial for insurance agents in Florida to explain when recommending life insurance products tailored to clients' needs and risk tolerance. Question 5. What defines final expense insurance policies compared to other life insurance policies available in Florida? A. Final expense insurance policies are designed to cover specific end-of-life costs, such as funeral expenses and outstanding debts, providing a fixed death benefit to beneficiaries. B. Variable life insurance policies offer a cash value component that can be invested in separate accounts, offering potential for higher returns. C. Accidental death benefit riders can be added to any life insurance policy to provide additional benefits in case of accidental death. D. All of the above. The correct answer, A. Final expense insurance policies are designed to cover specific end-of-life costs, such as funeral expenses and outstanding debts, providing a fixed death benefit to beneficiaries. Explanation. Final expense insurance policies in Florida are tailored to cover costs associated with funerals, burials, and other end-of-life expenses. They typically provide a fixed death benefit that helps ease the financial burden on loved ones after the insured's passing. Unlike other life insurance policies that may have broader purposes, such as income replacement or wealth accumulation, final expense policies have a specific focus on covering these essential end-of-life costs. Insurance agents in Florida often recommend final expense policies to clients seeking to ensure their families are not burdened with substantial funeral expenses upon their death. Question 6. What is the purpose of an accidental death benefit rider in a life insurance policy in Florida? A. Accidental death benefit riders provide additional coverage if the insured's death is due to an accident, offering an extra payout to beneficiaries. B. Variable life insurance policies allow policyholders to allocate their cash value into investment accounts for potential growth. C. Final expense insurance policies are specifically designed to cover funeral and burial expenses. D. All of the above. The correct answer, A. Accidental death benefit riders provide additional coverage if the insured's death is due to an accident, offering an extra payout to beneficiaries. Explanation. In Florida, an accidental death benefit rider is an optional addition to a life insurance policy that provides supplementary coverage in case the insured dies due to an accident. This rider ensures that beneficiaries receive an additional payout if the insured's death is deemed accidental, on top of the base death benefit provided by the policy. It's important for insurance agents in Florida to explain this rider to clients who may want extra protection against accidental death scenarios. However, it's crucial to note that definitions and exclusions for accidental death can vary by policy, so clients should carefully review the terms of the rider before adding it to their life insurance coverage. Question 7. What is the purpose of a critical illness rider in a life insurance policy in Florida? A. Critical illness riders provide coverage for medical expenses associated with serious illnesses such as cancer, heart attack, or stroke. B. Disability income riders offer supplementary income if the insured becomes disabled and unable to work. C. Long-term care insurance riders cover expenses related to long-term care services, such as nursing home care or in-home assistance. D. All of the above. The correct answer, A. Critical illness riders provide coverage for medical expenses associated with serious illnesses such as cancer, heart attack, or stroke. Explanation. In Florida, a critical illness rider is an optional addition to a life insurance policy that provides coverage for specific serious illnesses. If the insured is diagnosed with a covered critical illness during the policy term, this rider pays out a lump sum benefit that can be used to cover medical expenses, treatment costs, or other financial obligations. Critical illness riders are designed to offer financial protection beyond standard health insurance or disability coverage, focusing specifically on the high costs associated with critical illnesses. Insurance agents in Florida should educate clients about the benefits and limitations of this rider when discussing life insurance options to ensure comprehensive coverage for potential health risks. Question 8. What distinguishes a disability income rider from other policy provisions in a life insurance policy in Florida? A. Disability income riders provide a source of income replacement if the insured becomes disabled and unable to work due to injury or illness. B. Critical illness riders cover medical expenses related to specific serious illnesses. C. Long-term care insurance riders cover expenses associated with long-term care services. D. All of the above. The correct answer, A. Disability income riders provide a source of income replacement if the insured becomes disabled and unable to work due to injury or illness. Explanation. In Florida, a disability income rider is an optional feature that can be added to a life insurance policy to provide ongoing income if the insured becomes disabled and unable to work due to injury or illness. This rider pays out a regular income stream to replace lost wages, helping the insured maintain financial stability during a period of disability. Disability income riders are valuable for individuals who rely on their income to meet living expenses and want additional protection beyond standard disability insurance coverage. Insurance agents in Florida should highlight the benefits of this rider when discussing life insurance options with clients who may be concerned about income security in the event of disability. Question 9. How does a long-term care insurance rider benefit policyholders in Florida? A. Long-term care insurance riders cover expenses associated with long-term care services, such as nursing home care, assisted living, or in-home care. B. Critical illness riders provide coverage for medical expenses related to specific serious illnesses. C. Disability income riders offer income replacement if the insured becomes disabled and unable to work. D. All of the above. The correct answer, A. Long-term care insurance riders cover expenses associated with long-term care services, such as nursing home care, assisted living, or in-home care. Explanation. A long-term care insurance rider in Florida is designed to provide coverage for expenses related to long-term care services that may not be covered by health insurance or Medicare. This rider helps policyholders pay for nursing home care, assisted living facilities, in-home care, and other services needed for extended periods due to chronic illness, disability, or cognitive impairment. Long-term care insurance riders offer financial protection against the high costs of long-term care, which can quickly deplete savings and retirement funds. Insurance agents in Florida should discuss the benefits of this rider with clients concerned about future care needs and wanting to safeguard their financial well-being against long-term care expenses. Question 10. What is the purpose of a spousal or child term rider in a life insurance policy in Florida? A. It provides additional coverage for the insured spouse or child, allowing them to be included under the same policy. B. It offers a cash value component that can be accessed by the insured spouse or child. C. It allows the insured to name their spouse or child as the beneficiary of the policy. D. It provides coverage for medical expenses related to the insured spouse or child. The correct answer, A. It provides additional coverage for the insured spouse or child, allowing them to be included under the same policy. Explanation. In Florida, a spousal or child term rider is an optional addition to a life insurance policy that extends coverage to the insured spouse or child under the same policy. This rider provides additional protection for family members by offering a term life insurance benefit if the spouse or child passes away during the policy term. It's a cost-effective way to ensure comprehensive coverage for the entire family under a single policy. Insurance agents in Florida often recommend this rider to clients looking to protect their loved ones financially in case of unexpected events. Question 11. What is the underwriting process for different types of insurance like property, liability, and health in Florida? A. Property insurance underwriting focuses on assessing risks related to physical assets, such as homes or vehicles, by evaluating factors like location, construction type, and claims history. B. Liability insurance underwriting involves evaluating risks associated with potential legal claims against the insured, considering factors like business operations, industry type, and claims history. C. Health insurance underwriting assesses an individual's health status and medical history to determine the risk of future claims, including factors like pre-existing conditions and lifestyle habits. D. All of the above. The correct answer, D. All of the above. Explanation. In Florida, the underwriting process varies depending on the type of insurance being considered. Property insurance underwriters assess risks related to physical properties, focusing on factors like location, construction quality, and past claims. Liability insurance underwriters evaluate risks associated with legal claims against the insured, considering business operations and industry-specific factors. Health insurance underwriting involves assessing an individual's health status, medical history, and lifestyle habits to predict the likelihood of future claims. Each underwriting process is tailored to the specific risks and characteristics of the insurance type, helping insurers determine appropriate premiums and coverage terms. Question 12. What risk assessment tools and methodologies are commonly used in underwriting for insurance in Florida? A. Actuarial analysis involves statistical modeling and forecasting to assess risk based on historical data and industry trends. B. Medical underwriting evaluates an applicant's health status and medical history to determine the risk of future claims. C. Credit scoring assesses an applicant's creditworthiness and financial stability as an indicator of potential insurance risk. D. All of the above. The correct answer, D. All of the above. Explanation. In Florida, insurance underwriters utilize various risk assessment tools and methodologies to evaluate applicants and determine appropriate premiums and coverage terms. Actuarial analysis involves using statistical models and industry data to forecast risk and calculate premiums. Medical underwriting assesses an applicant's health condition and medical history to predict future claims likelihood. Credit scoring evaluates an applicant's credit history and financial stability, which can be indicative of their ability to manage insurance premiums and potential risk. By employing these comprehensive risk assessment tools, insurers in Florida can make informed underwriting decisions that balance risk and affordability for policyholders. Understanding these methodologies is essential for insurance professionals to ensure fair and accurate underwriting practices. Question 13. How are actuarial tables and mortality tables used in life insurance underwriting in Florida? A. Actuarial tables are used to estimate the risk of death based on age, gender, and other factors, while mortality tables help calculate the probability of survival over a specific period. B. Actuarial tables determine policy premiums based on an individual's health history, while mortality tables assess the financial risk to the insurance company. C. Actuarial tables predict the cash value growth of permanent life insurance policies, while mortality tables determine the death benefit payout. D. Actuarial tables are used to assess property values for insurance purposes, while mortality tables estimate the risk of disability. The correct answer, A. Actuarial tables are used to estimate the risk of death based on age, gender, and other factors, while mortality tables help calculate the probability of survival over a specific period. Explanation: in Florida, actuarial tables and mortality tables play crucial roles in life insurance underwriting. Actuarial tables provide statistical data used to estimate the risk of death based on various factors such as age, gender, occupation, and health status. These tables help insurers assess the likelihood of policyholders making claims and determine appropriate premiums. Mortality tables, on the other hand, calculate the probability of survival over a specific period, enabling insurers to predict future liabilities and manage financial reserves. Understanding and applying these tables accurately is essential for insurance professionals in Florida to ensure fair and accurate underwriting practices. Question 14. What is the role of underwriting in determining policy premiums and coverage for life insurance in Florida? A. Underwriting involves assessing an applicant's risk profile to determine if they qualify for coverage, as well as setting appropriate policy premiums based on the assessed risk. B. Underwriting determines the policy benefits and coverage limits, regardless of the applicant's risk profile. C. Underwriting solely focuses on verifying an applicant's identity and financial background. D. Underwriting is not a factor in determining life insurance policy premiums or coverage. The correct answer: A. Underwriting involves assessing an applicant's risk profile to determine if they qualify for coverage, as well as setting appropriate policy premiums based on the assessed risk. Explanation: in Florida, underwriting plays a critical role in the life insurance process. Underwriters assess an applicant's risk profile by reviewing factors such as age, health history, lifestyle habits, and occupation. Based on this evaluation, underwriters determine whether the applicant qualifies for coverage and calculate the appropriate premiums that reflect the level of risk assumed by the insurer. Underwriting ensures that policy premiums are fair and accurately reflect the insured's risk profile, helping insurers manage their financial exposure while providing adequate coverage to policyholders. Question 15. How does cash value accumulate in permanent life insurance policies in Florida? A. Cash value accumulates based on the insurer's investment performance and market conditions. B. Cash value is determined by the insured's age and health status at the time of policy issuance. C. Cash value accumulates gradually over time through a portion of the policy premiums that are allocated to a separate account. D. Cash value remains fixed and does not accumulate in permanent life insurance policies. The correct answer: C. Cash value accumulates gradually over time through a portion of the policy premiums that are allocated to a separate account. Explanation: in Florida, permanent life insurance policies, such as whole life or universal life, include a cash value component that grows over time. A portion of each premium payment is allocated to the cash value account, which earns interest or investment returns depending on the insurer's performance. Over the years, the cash value accumulates tax-deferred and can be accessed by the policyholder through withdrawals or loans. This feature distinguishes permanent life insurance from term life insurance, offering a savings element along with lifelong coverage. Insurance agents in Florida should explain the cash value accumulation mechanism to clients seeking long-term financial benefits and flexibility in their life insurance policies. Question 16. What are surrender charges and penalties associated with early policy termination in Florida? A. Surrender charges are fees imposed by the insurer if a policyholder terminates a permanent life insurance policy early, typically within the first few years of issuance. B. Surrender charges apply only to term life insurance policies and are incurred if the policyholder terminates the policy before the expiration of the term. C. Surrender charges are penalties imposed by the state of Florida for early termination of any type of life insurance policy. D. Surrender charges are fees paid by the beneficiary when making a claim on a life insurance policy. The correct answer: A. Surrender charges are fees imposed by the insurer if a policyholder terminates a permanent life insurance policy early, typically within the first few years of issuance. Explanation. In Florida, surrender charges are fees levied by the insurance company if a policyholder decides to terminate a permanent life insurance policy before a specified period, usually within the first several years of the policy's issuance. These charges are intended to cover administrative costs and compensate the insurer for lost future earnings on the policy. Surrender charges can vary based on the policy terms and usually decrease over time. Insurance agents in Florida should explain surrender charges to policyholders considering early termination to help them make informed decisions about their policies. Question 17. What are policy loans and their implications in Florida life insurance policies? A. Policy loans are loans provided by the insurance company to policyholders using the cash value of their permanent life insurance policies as collateral. B. Policy loans are advances made by the policyholder to the insurer to cover premium payments when cash flow is tight. C. Policy loans refer to the surrender of a life insurance policy in exchange for a lump sum payment from the insurer. D. Policy loans are grants provided by the state of Florida to policyholders experiencing financial hardship. The correct answer, A. Policy loans are loans provided by the insurance company to policyholders using the cash value of their permanent life insurance policies as collateral. Explanation. In Florida, policy loans allow policyholders to borrow funds from the cash value accumulated within their permanent life insurance policies. The loan amount is typically limited to a percentage of the available cash value and accrues interest. Policy loans can be used for various purposes, such as covering unexpected expenses or supplementing income during retirement. However, it's important for policyholders to understand that unpaid policy loans can reduce the death benefit and cash value of the policy. Insurance agents in Florida should educate clients about the implications of policy loans to help them make informed financial decisions. Question 18. What are the policy owner's rights regarding changing beneficiaries, assigning, or transferring a life insurance policy in Florida? A. Policy owners in Florida have the right to change beneficiaries at any time without restrictions or approvals from the insurer. B. Policy owners can assign their life insurance policy to another individual or entity, transferring all ownership rights and responsibilities. C. Policy owners can transfer their life insurance policy to a new insurer without penalty. D. All of the above. The correct answer, D. All of the above. Explanation. In Florida, policy owners have significant rights regarding the management and control of their life insurance policies. They can change beneficiaries at any time without needing approval from the insurer. Policy owners also have the option to assign or transfer their policies to another individual or entity, thereby transferring ownership rights and responsibilities. Additionally, policy owners can choose to transfer their policies to a different insurer through a process known as policy replacement. Understanding these rights empowers policy owners to make adjustments to their life insurance coverage based on changing circumstances or needs. Insurance agents in Florida should educate clients about these rights to ensure they fully understand and utilize their policy owner privileges. Question 19. What are annuity payout options available in Florida, allowing policyholders to receive payments during retirement? A. Life-only option provides payments for the annuitant's lifetime only, with no continuation of payments to beneficiaries upon the annuitant's death. B. Joint life option provides payments for the lifetimes of two annuitants, typically spouses, and ceases upon the death of both annuitants. C. Certain option guarantees payments for a specific period, even if the annuitant dies before the end of the period, with remaining payments going to beneficiaries. D. All of the above. The correct answer, D. All of the above. Explanation. In Florida, annuity payout options offer flexibility to policyholders in managing retirement income. The life-only option provides payments for the annuitant's lifetime but ceases upon their death, offering the highest monthly payments. The joint life option extends payments for the lifetimes of two annuitants, e.g., spouses, ceasing upon the death of both. The period certain option guarantees payments for a specified period, e.g., 10 or 20 years, ensuring beneficiaries receive remaining payments if the annuitant dies before the period ends. Understanding these options helps annuity buyers in Florida tailor their retirement income strategy to meet their financial goals and needs. Question 20. What are the tax implications of annuity withdrawals and distributions in Florida? A. Withdrawals from annuities are always tax-free, regardless of the annuity type or duration. B. Annuity distributions are taxed as ordinary income, with earnings taxed first and contributions, basis, taxed last. C. Annuity distributions are taxed at a lower capital gains tax rate, similar to investment gains from stocks. D. Tax implications of annuities vary based on the annuity type and specific terms outlined in the policy. The correct answer, B. Annuity distributions are taxed as ordinary income, with earnings taxed first and contributions, basis, taxed last. Explanation. In Florida, annuity distributions are generally treated as ordinary income for tax purposes. This means that the earnings portion of annuity payments is taxed at the recipient's applicable income tax rate, while the portion considered a return of principal, contributions, is not subject to immediate taxation. If annuity withdrawals are made before age 59 and a half, they may also incur a 10% early withdrawal penalty unless an exception applies. It's essential for annuity owners in Florida to understand these tax implications and consult with tax advisors or financial professionals to optimize their retirement income strategy while minimizing tax liabilities. Question 21. What are annuity surrender periods and surrender charges in Florida? A. Annuity surrender periods refer to the duration during which a policyholder cannot withdraw funds without incurring surrender charges imposed by the insurer. B. Surrender charges are fees imposed by the state of Florida on annuity contracts to discourage early withdrawals. C. Annuity surrender periods apply only to joint life annuities, limiting the withdrawal options for annuitants. D. Surrender charges are voluntary fees paid by annuity owners to increase the value of their annuity contracts. The correct answer, A. Annuity surrender periods refer to the duration during which a policyholder cannot withdraw funds without incurring surrender charges imposed by the insurer. Explanation. In Florida, annuity surrender periods are specific timeframes during which policyholders are subject to surrender charges if they withdraw funds from their annuities. These surrender charges are intended to discourage early withdrawals and may vary based on the terms of the annuity contract. Surrender charges typically decrease over time, allowing policyholders greater flexibility in accessing their funds as the surrender period elapses. It's important for annuity buyers in Florida to carefully review surrender terms and charges before purchasing annuity contracts to align with their financial goals and liquidity needs. Question 22. Which annuity payout option provides payments for the lifetime of the annuitant only, with no further benefits payable to any beneficiary upon the annuitant's death in Florida? A. Life with period certain. B. Joint life with last survivor. C. Life only. D. Period certain. The correct answer, C. Life only. Explanation. In Florida, the life only annuity payout option provides regular payments to the annuitant for their lifetime. Payments cease upon the annuitant's death, with no further benefits payable to any beneficiary. This option is suitable for individuals seeking guaranteed income for their own lifetime without concerns about leaving benefits to beneficiaries after their death. Insurance agents in Florida should explain the implications of the life-only annuity option to clients based on their retirement income needs and financial goals. Question 23. What are the tax implications of annuity withdrawals and distributions in Florida? A. Annuity withdrawals are always tax-free, regardless of the annuitant's age or the type of annuity contract. B. Annuity distributions are subject to ordinary income tax on the earnings portion of the withdrawal, regardless of the annuitant's age. C. Annuity distributions are tax-free if taken before age 59 and a half, similar to qualified retirement plan withdrawals. D. Annuity withdrawals are subject to capital gains tax rates rather than ordinary income tax rates. The correct answer, B. Annuity distributions are subject to ordinary income tax on the earnings portion of the withdrawal, regardless of the annuitant's age. Explanation. In Florida, annuity distributions are taxed as ordinary income on the earnings portion of the withdrawal, regardless of the annuitant's age. The portion of each distribution representing earnings, growth, within the annuity is taxable at the individual's ordinary income tax rate. If the annuity was purchased with after-tax funds, a portion of each distribution may be considered a tax-free return of principal. It's essential for annuity owners in Florida to understand the tax implications of withdrawals and distributions to plan their retirement income strategy effectively. Question 24. What do annuity surrender periods and surrender charges refer to in Florida? A. Annuity surrender periods are the duration during which an annuitant must wait before receiving payments from the annuity. B. Annuity surrender charges are fees imposed by the IRS for early withdrawals from a tax-deferred annuity. C. Annuity surrender periods are the duration during which an annuitant must keep the annuity contract before making withdrawals without penalty. D. Annuity surrender charges are fees imposed by the insurance company if the annuitant surrenders or terminates the annuity contract early. The correct answer, D. Annuity surrender charges are fees imposed by the insurance company if the annuitant surrenders or terminates the annuity contract early. Explanation. In Florida, annuity surrender charges are fees assessed by the insurance company if the annuitant surrenders or terminates the annuity contract before the end of the surrender period. The surrender period is a specified duration during which the annuitant is subject to these charges, which typically decrease over time. Surrender charges compensate the insurer for administrative costs and potential loss of investment returns associated with early contract termination. Understanding surrender charges and surrender periods is essential for annuity buyers in Florida to make informed decisions about their financial commitments and retirement planning strategies. Question 25. How are insurance rates and forms regulated in Florida under federal and state regulations? A. Insurance rates in Florida are set by individual insurance companies without oversight from regulatory authorities. B. Insurance rates and forms in Florida are regulated by the Florida Office of Insurance Regulation, OIR, to ensure they are fair, reasonable, and not discriminatory. C. Insurance rates and forms are primarily regulated by federal agencies such as the Federal Insurance Office, FIO, in Florida. D. Insurance rates and forms in Florida are regulated by the Internal Revenue Service, IRS, to ensure compliance with tax laws. The correct answer, B. Insurance rates and forms in Florida are regulated by the Florida Office of Insurance Regulation, OIR, to ensure they are fair, reasonable, and not discriminatory. Explanation. In Florida, insurance rates and forms are subject to regulation by the Florida Office of Insurance Regulation, OIR. The OIR oversees insurance companies to ensure that rates charged to policyholders are fair, reasonable, and not discriminatory based on factors such as age, gender, or location. Additionally, insurance forms, such as policy contracts and applications, must meet regulatory standards to protect consumer interests. This regulation helps maintain a stable insurance market and protects consumers from unfair pricing practices. Understanding these regulations is essential for insurance professionals in Florida to comply with state laws and provide ethical services to clients. Question 26. What measures are implemented in Florida to prevent and detect insurance fraud? A. Insurance fraud prevention in Florida is solely the responsibility of insurance companies, not state regulatory agencies. B. Florida employs specialized task forces within law enforcement agencies dedicated to investigating and prosecuting insurance fraud. C. Insurance fraud detection in Florida relies on voluntary reporting by insurance agents and policyholders. D. Florida does not have specific measures in place to address insurance fraud. The correct answer, B. Florida employs specialized task forces within law enforcement agencies dedicated to investigating and prosecuting insurance fraud. Explanation: in Florida, combating insurance fraud is a priority, and the state utilizes specialized task forces within law enforcement agencies to investigate and prosecute fraudulent activities. These task forces work collaboratively with insurance companies and regulatory agencies to identify patterns of fraud, including staged accidents, false claims, and other deceptive practices. Detecting and preventing insurance fraud helps protect consumers, insurers, and the integrity of the insurance industry in Florida. Insurance professionals in the state should be aware of these measures and actively participate in fraud prevention efforts. Question 27. What constitutes conflicts of interest in insurance sales and recommendations in Florida? A. A conflict of interest occurs when an insurance agent recommends a policy that offers the highest commission rate, regardless of the client's needs or circumstances. B. A conflict of interest arises when an insurance agent represents multiple insurance companies and recommends products based on personal relationships rather than client interests. C. There are no regulations addressing conflicts of interest in insurance sales and recommendations in Florida. D. A conflict of interest may arise if an insurance agent accepts gifts or incentives from an insurance company that influence their recommendations to clients. The correct answer, D. A conflict of interest may arise if an insurance agent accepts gifts or incentives from an insurance company that influence their recommendations to clients. Explanation: in Florida, conflicts of interest in insurance sales and recommendations can occur when insurance agents accept gifts, incentives, or compensation from insurance companies that could influence their advice and recommendations to clients. This practice may lead agents to prioritize their financial interests over the best interests of clients. Insurance professionals in Florida are expected to act ethically and disclose any potential conflicts of interest to clients, ensuring transparency and fair treatment. Understanding and adhering to ethical standards regarding conflicts of interest is essential for maintaining trust and integrity in the insurance industry. Question 28. Which ethical considerations are important in underwriting and claims handling in the state of Florida? A. Providing preferential treatment to certain policyholders based on personal relationships. B. Disclosing all relevant information and ensuring fairness in underwriting decisions and claims processing. C. Underwriting policies based on personal biases or discriminatory factors. D. Expediting claims processing for high-profile clients to maintain positive public relations. The correct answer, B. Disclosing all relevant information and ensuring fairness in underwriting decisions and claims processing. Explanation: in Florida, ethical considerations in underwriting and claims handling require insurance professionals to disclose all relevant information during the underwriting process and ensure fairness in claims processing. Underwriters must base decisions on objective criteria and avoid any form of discrimination or bias. Claims handlers must handle claims promptly, fairly, and in accordance with the terms of the policy. Upholding ethical standards in underwriting and claims handling is crucial for maintaining trust and integrity within the insurance industry. Question 29. What professional codes of conduct govern insurance agents and brokers in Florida? A. The HIPAA Privacy Rule. B. The NAIC Model Rules. C. The Fair Credit Reporting Act, FCRA. D. The Florida Insurance Code. The correct answer, D. The Florida Insurance Code. Explanation: in Florida, insurance agents and brokers are governed by the Florida Insurance Code, which outlines ethical standards and professional conduct requirements. The code specifies guidelines for advertising, selling, and servicing insurance policies in the state. Insurance professionals must adhere to these regulations to maintain their licenses and uphold public trust. Understanding and complying with the Florida Insurance Code is essential for insurance agents and brokers practicing in the state. Question 30. What ethical issues should insurance professionals consider in marketing and advertising practices in Florida? A. Making false or misleading statements about insurance products or services. B. Providing incentives or rewards to clients for referring new customers. C. Targeting specific demographic groups with higher premiums. D. Engaging in aggressive sales tactics without considering customer needs. The correct answer, A. Making false or misleading statements about insurance products or services. Explanation. In Florida, insurance professionals must avoid making false or misleading statements about insurance products or services in their marketing and advertising efforts. Misrepresentation can mislead consumers and undermine trust in the insurance industry. Ethical marketing practices emphasize transparency, accuracy, and honesty in communicating information about insurance products to consumers. Adhering to ethical standards in marketing and advertising helps protect consumers and maintains the reputation of insurance professionals in Florida. Question 31. What is the primary difference between an HMO, Health Maintenance Organization, and a PPO, Preferred Provider Organization, in the context of health insurance in Florida? A. HMOs typically require referrals from primary care physicians to see specialists, while PPOs allow direct access to specialists without referrals. B. Both HMOs and PPOs have open networks of healthcare providers with no restrictions on provider choice. C. HMOs are known for providing coverage only for emergency services, while PPOs cover preventive care and routine checkups. D. PPOs require prior authorization for any medical procedure, while HMOs do not require prior approval. Correct answer, A. HMOs typically require referrals from primary care physicians to see specialists, while PPOs allow direct access to specialists without referrals. Explanation. In Florida, HMOs and PPOs are two common types of health insurance plans. One key difference is that HMOs usually require members to choose a primary care physician, PCP, who manages their health care and issues referrals for specialist visits. In contrast, PPOs offer more flexibility by allowing members to see any healthcare provider within the network without referrals. Understanding these distinctions is crucial for insurance professionals to advise clients effectively on plan options based on their healthcare needs and preferences. Question 32. Which of the following describes a government-sponsored health insurance plan available in Florida? A. Medicare. B. COBRA. C. Short-term health insurance. D. Catastrophic health insurance. Correct answer, A. Medicare. Explanation. In Florida, Medicare is a government-sponsored health insurance program primarily designed for individuals aged 65 and older, certain younger individuals with disabilities, and individuals with end-stage renal disease, ESRD. Medicare provides coverage for hospital stays, doctor visits, prescription drugs, and other medical services. Understanding the basics of government-sponsored health insurance programs like Medicare is essential for insurance professionals assisting clients with healthcare coverage options. Question 33. What is a key characteristic of an EPO, Exclusive Provider Organization, health insurance plan in Florida? A. EPOs require members to choose a primary care physician, PCP, for managing healthcare services. B. EPOs have the most extensive provider networks, including out-of-network coverage. C. EPOs require members to obtain referrals from PCPs to see specialists within the network. D. EPOs offer coverage only for emergency services and do not cover routine care outside the network. Correct answer, B. EPOs have the most extensive provider networks, including out-of-network coverage. Explanation. In Florida, EPOs are health insurance plans that offer coverage through a specific network of healthcare providers. Unlike HMOs, EPOs do not require members to select a primary care physician, PCP, or obtain referrals for specialist visits. EPOs typically have a comprehensive network of providers but may not cover services received outside the network, except for emergency care. Understanding the coverage options and characteristics of EPOs is important for insurance professionals to assist clients in choosing suitable health insurance plans based on their preferences and needs. Question 34. Which policy provision in a health insurance plan typically requires the insured to pay a specified amount out of pocket before the insurance coverage kicks in for eligible expenses? A. Copayment. B. Deductible. C. Coinsurance. D. Premium. Correct answer. B. Deductible. Explanation. In health insurance policies in Florida, a deductible is the amount of money an insured individual must pay before the insurance company starts to cover eligible medical expenses. Deductibles vary depending on the plan and can apply annually or per occurrence. Understanding deductibles is essential for insured individuals to know their financial responsibility and when their insurance coverage will begin to provide benefits. Question 35. What does the term coinsurance refer to in the context of health insurance policies in Florida? A. The fixed amount an insured individual pays for covered services at the time of service. B. The percentage of medical costs shared between the insured individual and the insurance company after the deductible is met. C. The total amount an insured individual pays each month to maintain health insurance coverage. D. The maximum amount an insured individual is required to pay out of pocket before the insurance company covers 100% of eligible expenses. Correct answer. B. The percentage of medical costs shared between the insured individual and the insurance company after the deductible is met. Explanation. Coinsurance in Florida health insurance policies refers to the percentage of medical costs that the insured individual and the insurance company share after the deductible has been met. For example, if a policy has 80/20ths coinsurance, the insurance company will pay 80% of covered expenses, and the insured will pay the remaining 20%. Understanding coinsurance helps insured individuals anticipate their financial responsibility for healthcare services and manage their out-of-pocket expenses. Question 36. What are coverage limits and exclusions in a health insurance policy in Florida? A. The maximum amount of coverage the insurance company will provide for specific services or conditions. B. Services or conditions that are not covered by the health insurance policy. C. The time frame during which the health insurance policy is valid and in effect. D. The number of medical providers within the insurance company's network. Correct answer. A. The maximum amount of coverage the insurance company will provide for specific services or conditions. Explanation. Coverage limits and exclusions are important policy provisions in Florida health insurance plans. Coverage limits refer to the maximum amount of coverage the insurance company will provide for specific services or conditions, which can vary depending on the policy terms. Exclusions are services, treatments, or conditions that are not covered by the health insurance policy, such as cosmetic procedures or experimental treatments. Understanding coverage limits and exclusions helps insured individuals make informed decisions about their health care and manage expectations regarding insurance coverage. Question 37. What is a key factor considered during the underwriting process for health insurance in Florida? A. Gender of the applicant. B. Ethnicity of the applicant. C. Occupation and income level of the applicant. D. Marital status of the applicant. Correct answer. C. Occupation and income level of the applicant. Explanation. During the underwriting process for health insurance in Florida, the applicant's occupation and income level are important factors considered by insurance companies. These factors help assess the applicant's ability to pay premiums and the potential risk associated with their health status based on their work environment and income stability. Insurance companies use this information to determine insurability and appropriate premium rates. Question 38. Which of the following is true about risk selection and classification in health insurance underwriting in Florida? A. Risk selection is prohibited by law to ensure fairness in insurance pricing. B. Classification is based solely on age and does not consider other risk factors. C. Risk selection involves assessing the applicant's health history and lifestyle habits. D. Classification refers to geographic location and does not impact insurance premiums. Correct answer: C. Risk selection involves assessing the applicant's health history and lifestyle habits. Explanation: in Florida health insurance underwriting, risk selection involves evaluating an applicant's health history, lifestyle choices, such as smoking or physical activity level, and pre-existing conditions to assess the level of risk they pose to the insurance company. Classification, on the other hand, categorizes applicants into different risk pools based on these factors to determine appropriate premium rates. Understanding risk selection and classification is crucial for underwriters to accurately assess risk and set fair insurance premiums. Question 39. Which of the following factors affecting insurability is commonly considered during the underwriting process for health insurance in Florida? A. Home ownership status. B. Educational background. C. Personal health history and pre-existing conditions. D. Number of social media followers. Correct answer: C. Personal health history and pre-existing conditions. Explanation: in Florida, personal health history and pre-existing conditions are significant factors affecting insurability during the underwriting process for health insurance. Insurance companies assess an applicant's medical history, current health status, and any pre-existing conditions to evaluate the level of risk and determine eligibility for coverage. Applicants with certain health conditions may face higher premiums or coverage exclusions. Understanding how personal health factors impact insurability is essential for insurance professionals involved in underwriting and risk assessment. Question 40. What are the primary purposes of HIPAA regulations and privacy rules in the context of health insurance in Florida? A. To restrict access to healthcare services based on income level. B. To ensure individuals have access to affordable health insurance plans. C. To protect the privacy and security of individuals' health information. D. To determine eligibility for Medicaid and Medicare programs. Correct answer: C. To protect the privacy and security of individuals' health information. Explanation: HIPAA, Health Insurance Portability and Accountability Act, regulations and privacy rules aim to safeguard the confidentiality, integrity, and availability of individuals' health information. These rules set standards for the protection of sensitive patient data and establish guidelines for healthcare providers, insurers, and other entities to ensure the privacy and security of health information. HIPAA regulations are crucial in Florida to protect patient rights and maintain trust in the healthcare system. Question 41. Which provisions of the Affordable Care Act, ACA, have a significant impact on health insurance regulations in Florida? A. Mandate for coverage of essential health benefits. B. Requirement for lifetime limits on coverage. C. Expansion of pre-existing condition exclusions. D. Limitation of preventive care services. Correct answer: A. Mandate for coverage of essential health benefits. Explanation: the Affordable Care Act, ACA, includes provisions that require health insurance plans in Florida to cover essential health benefits, such as preventive care, maternity care, mental health services, and prescription drugs. This mandate ensures that individuals have access to comprehensive coverage that meets minimum standards set by the ACA. Understanding ACA provisions is essential for insurance professionals in Florida to comply with federal regulations and provide adequate coverage to policyholders. Question 42. What role do state and federal regulations play in governing health insurance practices in Florida? A. State regulations govern health insurance for individuals, while federal regulations apply to group health plans. B. State regulations focus on eligibility criteria, while federal regulations address claims processing. C. State and federal regulations work together to establish standards for health insurance coverage and consumer protections. D. State regulations are primarily concerned with insurance premiums, while federal regulations oversee provider networks. Correct answer: C. State and federal regulations work together to establish standards for health insurance coverage and consumer protections. Explanation: Health insurance regulations in Florida involve both state and federal oversight. State regulations address specific requirements for insurance plans sold within the state, including licensing, rates, and consumer protections. Federal regulations, such as those under the ACA and HIPAA, set broader standards for health insurance practices nationwide. Together, state and federal regulations ensure that insurance plans in Florida meet minimum standards of coverage, affordability, and consumer rights. Understanding the interaction between state and federal regulations is crucial for insurance professionals to navigate compliance and provide quality healthcare coverage. Question 43. What is the purpose of health insurance marketplaces, exchanges, in Florida? A. To provide free healthcare services to low-income individuals. B. To facilitate the purchase of private health insurance plans with standardized coverage options. C. To regulate insurance premiums for all health plans in the state. D. To administer Medicaid and Medicare programs. Correct answer: B. To facilitate the purchase of private health insurance plans with standardized coverage options. Explanation: Health insurance marketplaces, also known as exchanges, in Florida are designed to offer individuals and small businesses a platform to compare and purchase private health insurance plans. These marketplaces provide standardized information about available plans, costs, and coverage options, enabling consumers to make informed decisions about their healthcare coverage. They also offer subsidies and premium tax credits to eligible individuals to make health insurance more affordable. Question 44. When can individuals enroll in a health insurance plan through the marketplace in Florida outside of the annual open enrollment period? A. Only if they are transitioning between jobs. B. If they experience a qualifying life event, such as marriage or birth of a child. C. Anytime during the year with no restrictions. D. Only during state-specific enrollment periods. Correct answer: B. If they experience a qualifying life event, such as marriage or birth of a child. Explanation: In Florida, individuals can enroll in a health insurance plan through the marketplace outside of the annual open enrollment period if they experience a qualifying life event. These events include marriage, birth or adoption of a child, loss of other health coverage, or certain changes in income that affect eligibility for premium tax credits or subsidies. Understanding these special enrollment options is important for consumers to access health insurance when life circumstances change. Question 45. What do subsidies and premium tax credits provide to eligible individuals in Florida's health insurance marketplace? A. Discounts on prescription medications. B. Free preventive care services. C. Financial assistance to lower monthly premiums and out-of-pocket costs. D. Coverage for pre-existing conditions. Correct answer: C. Financial assistance to lower monthly premiums and out-of-pocket costs. Explanation: Subsidies and premium tax credits in Florida's health insurance marketplace help eligible individuals afford health insurance coverage. These financial assistance programs reduce the amount individuals need to pay for monthly premiums and may also lower out-of-pocket costs like deductibles and copayments. The goal is to make health insurance more affordable and accessible to individuals and families with lower incomes. Understanding how subsidies and tax credits work is crucial for insurance professionals and consumers navigating the marketplace. Question 46. What is the primary purpose of managed care organizations, MCOs, in Florida's health insurance system? A. To maximize profits for healthcare providers. B. To limit unnecessary healthcare costs while ensuring quality care for members. C. To provide unlimited healthcare benefits to all members. D. To exclusively contract with out-of-state providers. Correct answer: B. To limit unnecessary healthcare costs while ensuring quality care for members. Explanation: Managed care organizations, MCOs, in Florida are designed to manage healthcare costs while maintaining quality and access to care for members. They achieve this by implementing utilization management techniques, such as pre-authorization for certain services, network structures that negotiate favorable rates with providers, and utilization review processes that ensure appropriate care is delivered. The primary goal of MCOs is to control healthcare expenditures while promoting high-quality and efficient care delivery. Question 47. Which statement accurately describes the network structures of managed care organizations, MCOs, in Florida? A. MCOs do not have any network structures and provide coverage for any healthcare provider. B. MCOs typically have exclusive contracts with a limited network of healthcare providers. C. MCOs have unlimited networks that include all healthcare providers in the state. D. MCOs only contract with healthcare providers located outside of Florida. Correct answer: B. MCOs typically have exclusive contracts with a limited network of healthcare providers. Explanation: In Florida, managed care organizations, MCOs, usually establish network structures by contracting with specific healthcare providers, forming a limited network of preferred providers. These networks allow MCOs to negotiate discounted rates and control costs by directing members to seek care within the network. Members may have limited coverage or higher costs for services obtained outside of the contracted network. Understanding the network structures of MCOs is crucial for both insurance professionals and consumers when selecting health insurance plans. Question 48. What is the purpose of utilization review in managed care organizations, MCOs, operating in Florida? A. To maximize healthcare spending without restrictions. B. To limit access to necessary healthcare services. C. To ensure appropriate and efficient use of healthcare resources. D. To exclude certain populations from accessing healthcare benefits. Correct answer: C. To ensure appropriate and efficient use of healthcare resources. Explanation: Utilization review is a key managed care technique used by MCOs in Florida to evaluate the appropriateness, necessity, and efficiency of healthcare services. It helps ensure that members receive appropriate care based on evidence-based guidelines and that resources are used efficiently to control costs. Utilization review processes may involve pre-authorization for certain procedures, concurrent review of inpatient stays, and retrospective review to evaluate the necessity of services rendered. Understanding utilization review is essential for managing healthcare costs and improving the quality of care within managed care systems. Question 49. What is a key aspect of health insurance claims processing and adjudication in Florida? A. Maximizing out-of-pocket costs for policyholders. B. Minimizing the reimbursement for healthcare providers. C. Ensuring timely and accurate processing of claims. D. Delaying claim payments to policyholders. Correct answer: C. Ensuring timely and accurate processing of claims. Explanation: Health insurance claims processing and adjudication in Florida involves the systematic review, evaluation, and payment of healthcare claims submitted by policyholders or healthcare providers. The primary goal is to ensure that claims are processed promptly and accurately, adhering to the terms and conditions outlined in the insurance policy. Timely processing is essential to facilitate prompt reimbursement to healthcare providers and minimize disruptions in care for policyholders. Question 50. What information is typically included in an explanation of benefits, EOB, or claim statement issued by health insurers in Florida? A. Detailed medical diagnoses and treatment plans. B. Payment information and reimbursement details. C. Personal identification numbers of policyholders. D. Marketing materials promoting additional insurance products. Correct answer. B. Payment information and reimbursement details. Explanation. An explanation of benefits, EOB, or claim statement provided by health insurers in Florida typically includes detailed information about how a claim was processed and the amount of reimbursement the policyholder or healthcare provider can expect. This document outlines the services rendered, the amount covered by insurance, any deductible or copayment amounts, and the total payment made by the insurer. It serves as an important communication tool to inform policyholders of claim outcomes and financial responsibilities. Question 51. What measures are implemented by health insurers in Florida to prevent and detect fraud related to health insurance claims? A. Requiring healthcare providers to bill using paper-based forms only. B. Conducting periodic audits of policyholders' medical histories. C. Utilizing data analytics and technology to identify suspicious patterns. D. Allowing policyholders to submit claims without supporting documentation. Correct answer. C. Utilizing data analytics and technology to identify suspicious patterns. Explanation. Health insurers in Florida employ various strategies to prevent and detect fraud in health insurance claims. One effective method is the use of data analytics and advanced technology to analyze claims data for unusual patterns or behaviors that may indicate fraudulent activity. Insurers also conduct regular audits and investigations, collaborate with law enforcement agencies, and educate stakeholders on fraud prevention. These efforts help protect the integrity of the health insurance system and ensure that funds are used appropriately to provide legitimate healthcare services. Question 52. What are important ethical considerations in health insurance sales and service in Florida? A. Aggressive marketing tactics to increase policy sales. B. Providing misleading information to potential customers. C. Ensuring transparency and honesty in communications with customers. D. Discouraging policyholders from asking questions about coverage. Correct answer. C. Ensuring transparency and honesty in communications with customers. Explanation. Ethical considerations in health insurance sales and service in Florida emphasize the importance of transparency, honesty, and integrity in all interactions with customers. Insurance agents must provide accurate and clear information about policy coverage, benefits, exclusions, and costs to help customers make informed decisions. Misleading or deceptive practices are prohibited, and agents should prioritize the best interests of the consumer when recommending insurance products. Question 53. What consumer rights and protections are guaranteed under Florida insurance regulations? A. Right to unlimited coverage for all medical expenses. B. Right to cancel an insurance policy without penalty at any time. C. Right to appeal claim denials and decisions made by insurers. D. Right to increase premiums without notice from the insurer. Correct answer. C. Right to appeal claim denials and decisions made by insurers. Explanation. Under Florida insurance regulations, consumers have important rights and protections, including the right to appeal claim denials and adverse decisions made by insurers. This process allows policyholders to challenge decisions that affect their coverage or benefits and seek reconsideration based on valid reasons. Insurance companies must adhere to specific procedures for appeals, ensuring fairness and accountability in claims handling. Question 54. What constitutes fair marketing and sales practices in the context of health insurance in Florida? A. Targeting vulnerable populations with deceptive advertising. B. Providing false promises of guaranteed coverage without exclusions. C. Ensuring advertisements are accurate, truthful, and not misleading. D. Excluding certain demographics from accessing insurance products. Correct answer. C. Ensuring advertisements are accurate, truthful, and not misleading. Explanation. Fair marketing and sales practices in health insurance in Florida require that advertisements and sales materials are accurate, truthful, and not misleading. Insurance companies and agents must avoid deceptive tactics that could mislead consumers about the terms, benefits, or costs of insurance products. Clear and transparent communication is essential to maintain consumer trust and comply with ethical standards in the insurance industry. Question 55. Which of the following is an example of a supplemental health insurance product commonly offered alongside major medical coverage? A. Homeowners insurance. B. Disability insurance. C. Vision insurance. D. Auto insurance. Correct answer: C. Vision insurance. Explanation: supplemental health insurance products, such as vision and dental insurance, are designed to provide coverage for specific health needs beyond what is typically covered by major medical insurance plans. Vision insurance specifically covers eye-related services, including routine eye exams, eyeglasses, and contact lenses. In Florida, insurance companies often offer vision insurance as a standalone product or as a rider to comprehensive health insurance plans to provide additional coverage for vision care expenses. Question 56. What are optional policy riders and endorsements in health insurance policies used for? A. They allow policyholders to increase their coverage limits without additional premiums. B. They provide coverage for pre-existing conditions not covered under the base policy. C. They offer additional benefits or coverage enhancements to customize a policy. D. They exclude certain medical services from coverage to reduce premiums. Correct answer: C. They offer additional benefits or coverage enhancements to customize a policy. Explanation: optional policy riders and endorsements in health insurance policies are used to customize coverage based on individual needs and preferences. These riders provide additional benefits or enhancements to a base policy, allowing policyholders to tailor their coverage to better suit their healthcare requirements. Examples of optional riders include coverage for specific illnesses, increased benefit amounts for certain services, or coverage for alternative treatments not included in the base policy. Question 57. What is the purpose of critical illness and long-term care insurance? A. To provide coverage for routine medical expenses and preventive care. B. To cover expenses related to chronic illnesses and disabilities requiring long-term care. C. To reimburse policyholders for emergency medical treatment abroad. D. To offer coverage for cosmetic procedures and elective surgeries. Correct answer: B. To cover expenses related to chronic illnesses and disabilities requiring long-term care. Explanation: critical illness and long-term care insurance policies are designed to provide financial protection in case of serious health events that may not be covered by standard health insurance plans. Critical illness insurance pays a lump sum benefit upon diagnosis of a covered critical illness, such as cancer or heart disease, to help cover medical costs and other expenses. Long-term care insurance covers the costs associated with long-term care services, including nursing home care, assisted living, and in-home care, for policyholders who require extended assistance due to chronic illness, disability, or cognitive impairment. Question 58. What are the tax implications of health insurance premiums for individual policyholders? A. Health insurance premiums are fully deductible from federal income taxes. B. Health insurance premiums are not tax-deductible for individual policyholders. C. Health insurance premiums are partially deductible based on income levels. D. Health insurance premiums are deductible only for certain types of health plans. Correct answer: B. Health insurance premiums are not tax-deductible for individual policyholders. Explanation: in general, health insurance premiums paid by individual policyholders for personal health coverage are not tax-deductible for federal income tax purposes. However, there are specific situations where health insurance premiums may be tax-deductible, such as when they are paid through pre-tax dollars in an employer-sponsored plan or for self-employed individuals under certain conditions. It's important for policyholders to consult with a tax advisor to understand specific deductions applicable to their situation. Question 59. How do health insurance companies comply with IRS regulations regarding premium tax credits under the Affordable Care Act, ACA? A. By ensuring all policies comply with state regulations. B. By reporting premium tax credit information to the IRS and issuing Form 1095-A to policyholders. C. By collecting taxes on premium payments and remitting them to the federal government. D. By providing tax deductions directly to policyholders based on premium amounts. Correct answer: B. By reporting premium tax credit information to the IRS and issuing Form 1095-A to policyholders. Explanation: Health insurance companies participating in the health insurance marketplace under the Affordable Care Act, ACA, must comply with IRS regulations related to premium tax credits. This includes reporting premium tax credit information to the IRS and issuing Form 1095-A to policyholders. Form 1095-A provides detailed information about the coverage, premiums paid, and any premium tax credits received by the policyholder, which is used for tax filing purposes. Question 60. What are the reporting requirements for insurers and policyholders related to health insurance coverage? A. Insurers must report coverage details to the state insurance department only. B. Insurers must report coverage details to the IRS and issue Form 1095-B or 1095-C to policyholders. C. Policyholders are responsible for reporting coverage details to the IRS. D. Reporting requirements do not apply to health insurance coverage. Correct answer: B. Insurers must report coverage details to the IRS and issue Form 1095-B or 1095-C to policyholders. Explanation: Under IRS regulations, insurers are required to report coverage details to the IRS annually and issue Form 1095-B for individual coverage or Form 1095-C for employer-provided coverage to policyholders. These forms provide information about the type of coverage held and the months covered during the year. Policyholders use this information to verify coverage for tax purposes, including meeting the requirements of the individual mandate, if applicable, and claiming premium tax credits. Question 61. Which of the following statements accurately describes the role of telemedicine in health insurance? A. Telemedicine services are typically not covered by health insurance plans due to regulatory restrictions. B. Health insurance plans may offer coverage for telemedicine services, allowing patients to consult with healthcare providers remotely. C. Telemedicine services are covered only for certain types of medical specialties, such as dermatology and psychiatry. D. Telemedicine services are covered by health insurance plans but require additional out-of-pocket expenses from patients. Correct answer: B. Health insurance plans may offer coverage for telemedicine services, allowing patients to consult with healthcare providers remotely. Explanation: Telemedicine has become an increasingly important trend in health insurance, especially in light of technological advancements and the need for remote healthcare services. Many health insurance plans now provide coverage for telemedicine consultations, allowing patients to connect with healthcare providers virtually for diagnosis, treatment, and follow-up care. This trend is particularly significant in enhancing access to healthcare, especially in rural or underserved areas. Question 62. What is a key feature of value-based care models in health insurance? A. Value-based care models focus on increasing patient out-of-pocket expenses. B. Value-based care models emphasize paying healthcare providers based on the quantity of services provided. C. Value-based care models prioritize healthcare quality and outcomes over the volume of services delivered. D. Value-based care models are primarily applicable to large hospital systems and academic medical centers. Correct answer: C. Value-based care models prioritize healthcare quality and outcomes over the volume of services delivered. Explanation: value-based care models represent a shift in healthcare delivery, emphasizing quality, efficiency, and patient outcomes. Under these models, healthcare providers are incentivized to deliver high-quality care that leads to positive health outcomes for patients, rather than focusing solely on the volume of services provided. Health insurance plans increasingly adopt value-based payment arrangements to promote cost-effective and patient-centered care. Question 63. How do technological innovations contribute to healthcare delivery within the context of health insurance? A. Technological innovations in healthcare have primarily increased administrative costs for insurers. B. Health insurance plans are not impacted by technological innovations in healthcare delivery. C. Technological innovations enable improved data analytics and personalized care options for patients. D. Technological innovations have led to decreased coverage for preventive services by health insurance plans. Correct answer: C. Technological innovations enable improved data analytics and personalized care options for patients. Explanation: technological innovations, such as artificial intelligence, AI, wearable devices, and telehealth platforms, play a crucial role in transforming healthcare delivery. These innovations enable health insurers to harness data analytics to better understand patient needs, personalize care options, and identify preventive measures. Ultimately, technological advancements contribute to improving healthcare outcomes and reducing costs, benefiting both insurers and patients. Question 64. Which of the following statements accurately describes a term life insurance policy? A. Term life insurance policies provide coverage for the entire life of the insured, with a guaranteed cash value accumulation. B. Term life insurance policies offer coverage for a specific period, term, such as 10, 20, or 30 years, with no cash value component. C. Term life insurance policies combine life insurance coverage with an investment component that earns interest over time. D. Term life insurance policies are typically used for estate planning purposes and offer tax-deferred growth of cash value. Correct answer: B. Term life insurance policies offer coverage for a specific period, term, such as 10, 20, or 30 years, with no cash value component. Explanation: term life insurance provides coverage for a specified period or term, such as 10, 20, or 30 years. These policies do not accumulate cash value and are designed to provide a death benefit to beneficiaries if the insured passes away during the term of the policy. Term life insurance is often used to cover temporary needs, such as paying off a mortgage or providing income replacement for dependents. Question 65. What distinguishes a universal life insurance policy from other types of life insurance? A. Universal life insurance policies have fixed premiums that do not change over time. B. Universal life insurance policies offer flexible premium payments and an adjustable death benefit. C. Universal life insurance policies provide coverage only for accidental death and dismemberment. D. Universal life insurance policies are exclusively sold through employer-sponsored benefit plans. Correct answer: B. Universal life insurance policies offer flexible premium payments and an adjustable death benefit. Explanation: universal life insurance is a type of permanent life insurance that offers flexibility in premium payments and death benefits. Policyholders can adjust the amount and timing of premium payments, and the policy's cash value can earn interest based on current market rates. The death benefit can also be adjusted during the life of the policy, providing greater flexibility to meet changing financial needs. Question 66. What feature is characteristic of a whole life insurance policy? A. Whole life insurance policies provide coverage for a limited period and then require renewal. B. Whole life insurance policies do not include a savings component or cash value accumulation. C. Whole life insurance policies offer a fixed death benefit that cannot be adjusted over time. D. Whole life insurance policies accumulate cash value over time and provide coverage for the insured's entire life. Correct answer. D. Whole life insurance policies accumulate cash value over time and provide coverage for the insured's entire life. Explanation. Whole life insurance is a type of permanent life insurance that provides coverage for the insured's entire life, as long as premiums are paid. These policies accumulate cash value over time, which grows tax-deferred and can be accessed by the policyholder through loans or withdrawals. Whole life insurance offers a fixed death benefit and stable premiums throughout the life of the policy. Question 67. What is a defining characteristic of variable life insurance policies? A. Fixed premiums that do not change over the life of the policy. B. Guaranteed minimum cash value accumulation. C. Policyholders' ability to allocate premiums into investment accounts. D. Coverage that remains the same regardless of market conditions. Correct answer. C. Policyholders' ability to allocate premiums into investment accounts. Explanation. Variable life insurance policies allow policyholders to allocate premiums into separate investment accounts, often referred to as subaccounts. These subaccounts operate similarly to mutual funds and are subject to market risks and potential returns. The cash value of a variable life policy fluctuates based on the performance of the chosen investment options. Unlike traditional whole life policies, variable life policies do not offer guaranteed minimum cash values and provide the policyholder with greater control over investment decisions. Question 68. What is a primary purpose of final expense insurance policies? A. To provide coverage for long-term care expenses. B. To cover funeral and burial expenses. C. To accumulate cash value for retirement income. D. To provide income replacement in case of disability. Correct answer. B. To cover funeral and burial expenses. Explanation. Final expense insurance, also known as burial insurance or funeral insurance, is designed to cover the costs associated with funeral services, burial, and related expenses. It is typically a small whole life insurance policy with a death benefit intended to cover these specific costs. Final expense policies are often sought by individuals who want to ensure that their funeral expenses do not burden their loved ones upon their passing. Question 69. What does an accidental death benefit rider provide in a life insurance policy? A. Additional coverage for death due to illness or natural causes. B. Guaranteed cash value accumulation over time. C. Double indemnity if the insured dies due to a covered accident. D. Access to accelerated death benefits for terminal illness. Correct answer. C. Double indemnity if the insured dies due to a covered accident. Explanation. An accidental death benefit rider, commonly added to life insurance policies, provides an additional benefit if the insured's death is the direct result of a covered accident. This rider typically pays out a benefit equal to double the face amount of the policy, double indemnity, if death occurs due to a covered accident, such as a car accident or other qualifying events. It is important to review policy details and exclusions to understand the specific coverage provided by this rider. Question 70. What does a critical illness rider provide in a life insurance policy? A. Additional coverage for disability income. B. Lump sum benefit upon diagnosis of a covered illness. C. Cash value accumulation for retirement. D. Guaranteed renewable coverage for life. Correct answer. B. Lump sum benefit upon diagnosis of a covered illness. Explanation. A critical illness rider is designed to provide a lump sum benefit to the insured upon the diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. This benefit is paid out regardless of whether the insured is able to continue working. It helps cover medical expenses and other financial obligations that may arise due to a serious illness, supplementing the primary life insurance coverage. Question 71. What is the primary purpose of a disability income rider in a life insurance policy? A. To provide a death benefit to the beneficiary. B. To pay a lump sum benefit upon diagnosis of a critical illness. C. To replace lost income due to a covered disability. D. To accumulate cash value over time. Correct answer: C. To replace lost income due to a covered disability. Explanation: a disability income rider is intended to provide supplemental income to the insured if they become disabled and are unable to work due to a covered disability. This rider typically pays a monthly benefit based on a percentage of the insured's pre-disability income, helping to replace lost earnings during the disability period. It complements the life insurance coverage by providing financial support in case of disability. Question 72. What does a long-term care insurance rider offer as part of a life insurance policy? A. Coverage for funeral and burial expenses. B. Additional death benefit to the beneficiary. C. Reimbursement for costs associated with long-term care services. D. Investment options to grow cash value. Correct answer: C. Reimbursement for costs associated with long-term care services. Explanation: a long-term care insurance rider provides coverage for expenses related to long-term care services, such as nursing home care, assisted living, and in-home care. It reimburses the insured for eligible expenses incurred due to long-term care needs, which are not typically covered under standard health insurance or Medicare. This rider helps address the financial burden of long-term care while preserving the primary life insurance benefit. Question 73. Which of the following best describes a spousal or child term rider in a life insurance policy? A. Provides coverage for the insured spouse or child under a separate policy. B. Extends coverage to the insured spouse or child for a specified term. C. Adds an additional term to the insured's policy duration. D. Provides investment options for the insured spouse or child. Correct answer: B. Extends coverage to the insured spouse or child for a specified term. Explanation: a spousal or child term rider is an optional addition to a life insurance policy that extends coverage to the insured spouse or child for a specified term, typically aligning with the term of the base policy. This rider provides an additional death benefit if the spouse or child passes away during the rider's term. It can offer financial protection for family members without requiring separate policies. Question 74. What is the primary purpose of the underwriting process in health insurance? A. To calculate policy premiums based on the insured's age and gender. B. To assess the insurability of applicants and determine appropriate coverage. C. To issue insurance policies without considering the applicant's medical history. D. To market insurance products to potential customers. Correct answer: B. To assess the insurability of applicants and determine appropriate coverage. Explanation: the underwriting process in health insurance involves evaluating the risk associated with insuring an individual. Underwriters assess the applicant's medical history, lifestyle factors, and other relevant information to determine their insurability and appropriate coverage. This process helps insurers manage risk and ensure fair pricing based on the applicant's health status and other factors. Question 75. Which risk assessment tool is commonly used in underwriting for property insurance? A. Actuarial tables. B. Medical underwriting reports. C. Loss history analysis. D. Credit scores. Correct answer: C. Loss history analysis. Explanation: loss history analysis is a risk assessment tool used in underwriting for property insurance. It involves analyzing the insured's past claims history and loss experience to assess the likelihood of future losses. By evaluating previous claims and understanding the property's risk profile, insurers can determine appropriate coverage and premiums. This helps insurers manage risk and make informed underwriting decisions. Question 76. In life insurance underwriting, what is the primary purpose of using actuarial tables and mortality tables? A. To calculate surrender values of life insurance policies. B. To determine the appropriate policy term for the insured. C. To assess the financial strength of the insurance company. D. To estimate the probability of death based on age and other factors. Correct answer. D. To estimate the probability of death based on age and other factors. Explanation. Actuarial tables and mortality tables are essential tools used in life insurance underwriting to estimate the probability of death based on various factors such as age, gender, health status, and lifestyle. These tables help insurers assess risk and determine appropriate premiums and coverage levels for. Question 77. What role does underwriting play in determining policy premiums and coverage in life insurance? A. Underwriting assesses the financial stability of policyholders. B. Underwriting evaluates the insurability of applicants and sets appropriate premiums. C. Underwriting determines the investment strategy for policy cash values. D. Underwriting approves policy loans for cash value policies. Correct answer. B. Underwriting evaluates the insurability of applicants and sets appropriate premiums. Explanation. Underwriting in life insurance involves evaluating the risk associated with insuring an individual, considering factors such as health, age, lifestyle, and medical history. Based on this assessment, underwriters determine the applicant's insurability and set appropriate premiums and coverage levels that reflect the associated risk. Question 78. Which statement best describes cash value accumulation in permanent life insurance policies? A. Cash value accumulation is not available in permanent life insurance policies. B. Cash value grows tax-deferred based on interest rates set by the Federal Reserve. C. Cash value accumulation represents the policyholder's equity in the policy. D. Cash value accumulation is used to pay for the policy's death benefit. Correct answer. C. Cash value accumulation represents the policyholder's equity in the policy. Explanation. Cash value accumulation is a unique feature of permanent life insurance policies where a portion of the premium payments accumulates over time and earns interest. This accumulated cash value belongs to the policyholder and can be accessed through policy loans or withdrawals. It represents the policyholder's equity in the policy and can provide additional financial flexibility. Question 79. What are surrender charges and penalties in the context of life insurance policies? A. Fees charged for late premium payments. B. Charges imposed on policy loans taken out by the policy owner. C. Penalties assessed for early termination of the policy or withdrawal of cash value. D. Additional fees for increasing the death benefit of the policy. Correct answer. C. Penalties assessed for early termination of the policy or withdrawal of cash value. Explanation. Surrender charges and penalties refer to fees imposed by the insurance company when a policyholder decides to surrender or terminate their life insurance policy prematurely, typically within the first several years of the policy. These charges are designed to recoup costs associated with issuing the policy and can reduce the amount of cash value received by the policy owner upon surrender. Question 80. What are policy loans in life insurance, and what implications do they have for policy owners? A. Loans offered by the government for purchasing life insurance policies. B. Loans taken out by policy owners using the cash value of their policies as collateral. C. Loans provided by employers to cover life insurance premiums. D. Loans offered to policy owners to pay for medical expenses. Correct answer. B. Loans taken out by policy owners using the cash value of their policies as collateral. Explanation. Policy loans allow policy owners to borrow against the cash value of their permanent life insurance policies. The loan amount is secured by the policy's cash value and accrues interest. Policy loans can provide policy owners with access to funds for various purposes but may reduce the policy's death benefit if not repaid. Question 81. What rights do life insurance policy owners have regarding beneficiaries, policy assignment, and policy transfers? A. Policy owners cannot change beneficiaries once designated. B. Policy owners have no rights to assign or transfer their policies to another person. C. Policy owners can change beneficiaries, assign, or transfer their policies to others, subject to policy terms and conditions. D. Only the insurance company has the authority to change beneficiaries or assign policies. Correct answer. C. Policy owners can change beneficiaries, assign, or transfer their policies to others, subject to policy terms and conditions. Explanation. Policy owners generally have the right to change beneficiaries, assign their policies to others, or transfer ownership, subject to the terms and conditions outlined in the policy contract. These rights provide flexibility to policy owners in managing their life insurance coverage based on their changing needs and circumstances. Question 82. What are the different annuity payout options available to annuitants? A. Lump sum payment. B. Life-only annuity. C. Period certain annuity. D. All of the above. Correct answer. D. All of the above. Explanation. Annuities offer various payout options to annuitants. These options include receiving a lump sum payment, choosing a life-only annuity that provides payments for life, with no beneficiary benefits, or selecting a period certain annuity that guarantees payments for a specific period, regardless of the annuitant's survival. Question 83. How are annuity withdrawals and distributions taxed? A. Withdrawals and distributions are always tax-free. B. Only the principal amount of annuity withdrawals is subject to tax. C. Withdrawals and distributions are taxed as ordinary income, with earnings subject to taxation. D. Tax treatment of annuity withdrawals depends on the annuitant's age. Correct answer. C. Withdrawals and distributions are taxed as ordinary income, with earnings subject to taxation. Explanation. Annuity withdrawals and distributions are generally taxed as ordinary income. The portion attributable to earnings, interest or investment gains, is subject to income tax at the annuitant's applicable tax rate. Additionally, early withdrawals before age 59.5 may be subject to a 10% IRS penalty tax. Question 84. What are annuity surrender periods and surrender charges? A. The initial period during which annuity payments are received. B. The period during which annuity payments can be deferred. C. The timeframe during which annuitants can withdraw funds without penalty. D. The period during which annuitants may incur charges for early surrender or withdrawal. Correct answer. D. The period during which annuitants may incur charges for early surrender or withdrawal. Explanation. Annuity surrender periods refer to a specific timeframe after purchasing the annuity during which surrendering or withdrawing funds may result in surrender charges imposed by the insurance company. Surrender charges are intended to recover sales and administrative expenses associated with the annuity and typically decrease over the surrender period. Question 85. What are the typical beneficiary options available for annuity death benefits? A. Lump sum payment to the estate. B. Installment payments over a fixed period. C. Life income options for the beneficiary. D. All of the above. Correct answer. D. All of the above. Explanation. Annuity death benefits can be paid out in various ways to beneficiaries. These options include a lump sum payment to the estate, installment payments over a fixed period, are life income options where the beneficiary receives payments for their lifetime. Question 86. What are the insurance licensing and continuing education requirements for agents in Florida? A. Agents must renew their licenses annually with no continuing education requirements. B. Agents must complete pre-licensing education and pass an exam, followed by biennial license renewal and continuing education credits. C. Agents must complete an apprenticeship program with a licensed agent before applying for a license. D. There are no specific requirements for insurance agents in Florida. Correct answer. B. Agents must complete pre-licensing education and pass an exam, followed by biennial license renewal and continuing education credits. Explanation. In Florida, insurance agents are required to complete pre-licensing education, pass a state exam, and renew their licenses biennially. Additionally, agents must fulfill continuing education requirements to maintain their licenses. Question 87. What is the role of state insurance departments in insurance regulation? A. State insurance departments oversee federal insurance laws and regulations. B. State insurance departments enforce licensing requirements for insurance companies only. C. State insurance departments regulate insurance activities within their state, ensuring compliance with state insurance laws and protecting consumers. D. State insurance departments provide tax incentives to insurance companies. Correct answer. C. State insurance departments regulate insurance activities within their state, ensuring compliance with state insurance laws and protecting consumers. Explanation. State insurance departments play a crucial role in regulating insurance activities within their respective states. They enforce state insurance laws, oversee insurance company solvency, licensing, and market conduct, and protect consumers by ensuring fair practices and compliance with state regulations. Question 88. Which entity is responsible for regulating insurance rates and forms in the state of Florida? A. Florida Department of Financial Services. B. Federal Insurance Office, FIO. C. National Association of Insurance Commissioners, NAIC. D. Florida Office of Insurance Regulation, OIR. Correct answer. D. Florida Office of Insurance Regulation, OIR. Explanation. In Florida, the regulation of insurance rates and forms falls under the purview of the Florida Office of Insurance Regulation, OIR. This office oversees the approval of insurance rates, policy forms, and related documents to ensure compliance with state laws and protect consumers from unfair practices. Question 89. What measures are typically employed to prevent and detect insurance fraud in Florida? A. Mandating higher premiums for high-risk policyholders. B. Conducting regular audits of insurance companies' financial records. C. Collaborating with law enforcement agencies to investigate suspicious activities. D. Requiring insurance agents to report any suspicious claims or activities. Correct answer. C. Collaborating with law enforcement agencies to investigate suspicious activities. Explanation. Insurance fraud prevention and detection in Florida involve close collaboration between insurance regulators, law enforcement agencies, and insurance companies. By conducting joint investigations and sharing information, these entities work to identify and prosecute individuals engaged in fraudulent activities within the insurance industry. Question 90. Which situation represents a conflict of interest in insurance sales and recommendations? A. An insurance agent recommending a policy that offers the highest commission rate. B. An insurance broker disclosing all policy options and benefits to the client. C. An insurance company offering discounts to loyal customers. D. An insurance adjuster processing a claim promptly and fairly. Correct answer. A. An insurance agent recommending a policy that offers the highest commission rate. Explanation. A conflict of interest arises when an insurance agent prioritizes personal financial gain, such as earning a higher commission, over the best interests of the client. Agents have a duty to provide unbiased advice and recommend policies that suit the client's needs, rather than solely focusing on maximizing their own compensation. Question 91. What are some ethical considerations in underwriting and claims handling for insurance professionals in Florida? A. Maximizing profits by denying legitimate claims. B. Providing accurate and complete information to policyholders. C. Charging higher premiums based on discriminatory factors. D. Delaying claims processing to avoid payouts. Correct answer. B. Providing accurate and complete information to policyholders. Explanation. In Florida, ethical considerations in underwriting and claims handling emphasize the importance of insurance professionals providing policyholders with accurate and complete information. This includes fair and timely claims processing, ensuring transparency, and adhering to legal and regulatory requirements to protect consumers' interests. Question 92. Which professional codes of conduct apply to insurance agents and brokers operating in Florida? A. NAIC Model Regulations. B. State-specific insurance laws. C. National Association of Insurance and Financial Advisors, NAIFA, Code of Ethics. D. Internal Revenue Code, IRC. Correct answer. C. National Association of Insurance and Financial Advisors, NAIFA, Code of Ethics. Explanation. Insurance agents and brokers in Florida are guided by professional codes of conduct, such as the NAIFA Code of Ethics, which outlines principles of integrity, professionalism, and honesty in serving clients. Adhering to these standards ensures ethical behavior and fosters trust within the insurance industry. Question 93. What are some ethical issues to consider in insurance marketing and advertising practices in Florida? A. Making false or misleading statements about policy benefits. B. Providing comprehensive and transparent information to consumers. C. Offering incentives to policyholders for timely premium payments. D. Using social media platforms to promote insurance products without disclosure. Correct answer. A. Making false or misleading statements about policy benefits. Explanation. In Florida, ethical issues in insurance marketing and advertising revolve around avoiding false or misleading statements about policy benefits, terms, or conditions. Insurance professionals must ensure that marketing materials are accurate, clear, and not deceptive to protect consumers and maintain trust in the insurance industry. Question 94. What is a key feature of health insurance plans that distinguishes them from other types of insurance? A. Health insurance covers routine maintenance of property. B. Health insurance provides coverage for preventive care and wellness. C. Health insurance protects against financial loss due to property damage. D. Health insurance guarantees income replacement in case of disability. Correct answer. B. Health insurance provides coverage for preventive care and wellness. Explanation. Health insurance plans are designed to provide coverage for medical expenses related to preventive care, wellness visits, and treatment of illnesses or injuries. Unlike property insurance, health insurance focuses on maintaining and improving individuals' health through medical services and preventive measures. Question 95. Which type of health insurance plan typically requires members to select a primary care physician, PCP, and obtain referrals for specialist care? A. Preferred Provider Organization, PPO. B. Exclusive Provider Organization, EPO. C. Health Maintenance Organization, HMO. D. Point of Service, POS, plan. Correct answer. C. Health Maintenance Organization, HMO. Explanation. Health maintenance organizations, HMOs, require members to select a primary care physician, PCP, who coordinates all their healthcare needs. Referrals from the PCP are usually necessary to see specialists within the network, promoting cost-effective and coordinated care. Question 96. Which of the following is an example of a government-sponsored health insurance program in the United States? A. Medicare. B. COBRA. C. Long-term care insurance. D. Short-term disability insurance. Correct answer. A. Medicare. Explanation. Medicare is a federal government-sponsored health insurance program that primarily serves individuals aged 65 and older, as well as certain younger individuals with disabilities. It provides coverage for hospital care, Part A, medical services, Part B, and prescription drugs, Part D, among other benefits. Question 97. Which of the following best describes the purpose of health insurance policy provisions and benefits? A. To limit coverage for pre-existing conditions. B. To outline the responsibilities of healthcare providers. C. To specify what services are covered and under what circumstances. D. To establish rules for insurance agent compensation. Correct answer. C. To specify what services are covered and under what circumstances. Explanation. Health insurance policy provisions are designed to detail the scope of coverage provided by the policy. This includes specifying covered services, conditions for coverage, limitations, and exclusions. Understanding these provisions is essential for policyholders to know what benefits they can expect from their health insurance plan. Question 98. Which of the following is an example of a common health insurance policy clause that requires the insured to pay a fixed amount before the insurer starts to cover expenses? A. Coinsurance. B. Copayment. C. Deductible. D. Exclusion clause. Correct answer. C. Deductible. Explanation. A deductible is the amount that the insured must pay out of pocket before the insurance company starts to pay for covered services. It is a common policy clause aimed at sharing the cost of healthcare between the insured and the insurer. Higher deductibles often result in lower premium costs. Question 99. What is the purpose of coverage limits and exclusions in a health insurance policy? A. To encourage policyholders to use specific healthcare providers. B. To define the maximum amount the insurer will pay for covered services. C. To promote preventive care and wellness programs. D. To limit the availability of prescription drug coverage. Correct answer. B. To define the maximum amount the insurer will pay for covered services. Explanation. Coverage limits and exclusions specify the boundaries of coverage within a health insurance policy. They define the maximum amount the insurer will pay for certain services or treatments and outline services that are not covered under the policy. Understanding these limits and exclusions helps policyholders manage their healthcare expenses effectively. Question 100. Which of the following best describes the underwriting process for health insurance? A. Evaluating the insured's risk profile and setting policy premiums. B. Issuing insurance policies without any risk assessment. C. Providing discounts based on age and gender. D. Conducting marketing activities to attract new policyholders. Correct answer. A. Evaluating the insured's risk profile and setting policy premiums. Explanation. The underwriting process for health insurance involves assessing the risk associated with insuring an individual or group. Insurers evaluate factors such as medical history, age, lifestyle, and occupation to determine the appropriate premium rates and coverage levels. This process helps ensure that premiums are set according to the level of risk posed by the insured. Question 101. What are the key factors that can affect an individual's insurability for health insurance coverage? A. Ethnicity and religious beliefs. B. Blood type and genetic information. C. Age, medical history, and lifestyle. D. Education level and employment status. Correct answer. C. Age, medical history, and lifestyle. Explanation. Factors affecting insurability for health insurance coverage include age, pre-existing medical conditions, lifestyle choices, such as smoking or exercise habits, and medical history. These factors help insurers assess the level of risk associated with providing coverage and influence premium rates and policy terms. Question 102. In risk selection and classification for health insurance, what does the process involve? A. Determining the policyholder's preferred healthcare providers. B. Assigning individuals to specific risk categories based on health status. C. Offering additional coverage for specific medical conditions. D. Excluding coverage for certain medical treatments. Correct answer. B. Assigning individuals to specific risk categories based on health status. Explanation. Risk selection and classification in health insurance involve categorizing individuals into risk pools based on their health status and level of risk. Insurers use this information to determine appropriate premiums and coverage options. Higher-risk individuals may face higher premiums or limited coverage, while lower-risk individuals may benefit from lower premiums and broader coverage. Question 103. Which of the following statements accurately describes state and federal regulations governing health insurance in Florida? A. Health insurance regulations are only governed by federal laws such as HIPAA. B. State regulations supersede federal regulations in all cases. C. Both state and federal regulations govern health insurance, but federal law preempts state law in certain instances. D. Health insurance regulations are solely governed by the Affordable Care Act, ACA. Correct answer. C. Both state and federal regulations govern health insurance, but federal law preempts state law in certain instances. Explanation. Health insurance regulations in Florida are subject to both state and federal laws. While states have authority over insurance regulation, federal laws such as the Affordable Care Act, ACA, and HIPAA also play a significant role. In cases where federal law conflicts with state law, federal law generally preempts or overrides state law. Question 104. Which of the following provisions is included in the Affordable Care Act, ACA? A. Requiring health insurance companies to cover pre-existing conditions. B. Limiting the age at which individuals can purchase health insurance. C. Mandating a single-payer healthcare system across the United States. D. Establishing a minimum age requirement for Medicare eligibility. Correct answer. A. Requiring health insurance companies to cover pre-existing conditions. Explanation. The Affordable Care Act, ACA, includes provisions that require health insurance companies to cover pre-existing conditions. This provision ensures that individuals cannot be denied coverage or charged higher premiums due to existing health conditions, providing more comprehensive access to health insurance coverage. Question 105. What does HIPAA, Health Insurance Portability and Accountability Act, primarily regulate in relation to health insurance? A. Prescription drug pricing. B. Patient privacy and health information security. C. Provider reimbursement rates. D. Minimum coverage requirements for health plans. Correct answer. B. Patient privacy and health information security. Explanation. HIPAA primarily regulates patient privacy and health information security in the context of health insurance. This includes rules and standards for protecting individuals' medical records and personal health information, ensuring confidentiality and preventing unauthorized access or disclosure. Question 106. What is the primary purpose of health insurance exchanges, marketplaces, established under the Affordable Care Act, ACA? A. To provide free healthcare services to low-income individuals. B. To regulate insurance premiums charged by private insurers. C. To facilitate the purchase of health insurance plans by individuals and small businesses. D. To administer Medicaid and Medicare programs in each state. Correct answer. C. To facilitate the purchase of health insurance plans by individuals and small businesses. Explanation. Health insurance exchanges, or marketplaces, were established under the ACA to provide a platform for individuals and small businesses to compare and purchase health insurance plans. These marketplaces offer a range of health insurance options and facilitate access to coverage, especially for those who do not have employer-sponsored insurance. Question 107. Which statement accurately describes enrollment periods and special enrollment options in health insurance marketplaces? A. Enrollment is open year-round without any specific deadlines or limitations. B. Special enrollment periods allow individuals to enroll outside of the annual open enrollment period under certain qualifying life events. C. Health insurance plans can only be purchased during specific times of the year, regardless of circumstances. D. Special enrollment options are only available to individuals with employer-sponsored insurance. Correct answer. B. Special enrollment periods allow individuals to enroll outside of the annual open enrollment period under certain qualifying life events. Explanation. Health insurance marketplaces have specific open enrollment periods each year. However, individuals experiencing qualifying life events such as marriage, birth of a child, loss of other coverage, or relocation may be eligible for special enrollment periods. These periods allow individuals to enroll or make changes to their health insurance coverage outside of the regular enrollment period. Question 108. What are subsidies and premium tax credits available through health insurance marketplaces? A. Grants provided to insurance companies to cover administrative costs. B. Discounts on healthcare services offered by participating providers. C. Financial assistance provided to eligible individuals to lower their health insurance premiums and out-of-pocket costs. D. Tax deductions for insurance agents and brokers who enroll individuals in health plans. Correct answer. C. Financial assistance provided to eligible individuals to lower their health insurance premiums and out-of-pocket costs. Explanation. Subsidies and premium tax credits are financial assistance programs offered through health insurance marketplaces to help eligible individuals and families afford health insurance coverage. These subsidies are based on income and can significantly reduce monthly premiums and out-of-pocket expenses for qualified enrollees. Question 109. Which of the following best describes a managed care organization, MCO? A. An insurance company that offers only Medicare Advantage plans. B. A healthcare provider that offers services without any network restrictions. C. An organization that coordinates healthcare services and utilizes cost containment strategies. D. A government agency that oversees Medicaid eligibility. Correct answer. C. An organization that coordinates healthcare services and utilizes cost containment strategies. Explanation. A managed care organization, MCO, is an entity that coordinates healthcare services for its members, typically by establishing contracts with healthcare providers and employing various cost containment techniques. MCOs aim to improve quality of care while controlling healthcare costs through network management, utilization review, and other managed care techniques. Question 110. What is a key characteristic of network structures in managed care organizations, MCOs? A. Networks include only primary care providers and exclude specialists. B. Networks are established to limit access to healthcare services for members. C. Networks consist of contracted healthcare providers who agree to provide services to MCO members. D. Networks are static and do not change over time. Correct answer. C. Networks consist of contracted healthcare providers who agree to provide services to MCO members. Explanation. In managed care organizations, MCOs, network structures consist of healthcare providers who have contracted with the MCO to deliver services to its members. These providers agree to accept negotiated payments and follow specific guidelines established by the MCO regarding care delivery and utilization. Question 111. What is the primary purpose of utilization review in managed care organizations, MCOs? A. To deny coverage for medically necessary services. B. To limit access to prescription medications for members. C. To evaluate the appropriateness and necessity of healthcare services provided. D. To exclude certain healthcare providers from the MCO's network. Correct answer. C. To evaluate the appropriateness and necessity of healthcare services provided. Explanation. Utilization review is a managed care technique used by MCOs to assess the appropriateness, necessity, and efficiency of healthcare services provided to members. This process helps ensure that services meet established criteria for medical necessity and quality of care, ultimately contributing to cost-effective healthcare delivery. Question 112. What is the primary purpose of claims processing and adjudication in health insurance? A. To deny coverage for medical services rendered. B. To reimburse healthcare providers for services rendered to policyholders. C. To review and evaluate the validity of insurance claims. D. To determine eligibility for insurance coverage. Correct answer. C. To review and evaluate the validity of insurance claims. Explanation. Claims processing and adjudication in health insurance involve the review and evaluation of insurance claims submitted by healthcare providers. This process assesses the accuracy, completeness, and eligibility of claims before reimbursement is made to the provider. It helps ensure that covered services meet policy terms and conditions. Question 113. What information is typically included in an explanation of benefits, EOB, or claim statement provided to policyholders? A. Diagnosis and treatment details of the insured individual. B. Itemized list of services rendered and corresponding costs. C. Premium payment history and policy coverage summary. D. Contractual agreements between the insurer and healthcare provider. Correct answer. B. Itemized list of services rendered and corresponding costs. Explanation. An explanation of benefits, EOB, or claim statement usually includes an itemized breakdown of healthcare services provided to the insured individual, along with associated costs. It shows how the claim was processed, any deductible or coinsurance amounts, and the final payment details. EOBs help policyholders understand how their insurance coverage is applied to specific medical services. Question 114. What role does fraud prevention and detection play in health insurance claims? A. To increase insurance premiums for policyholders. B. To identify and investigate potentially fraudulent activities. C. To deny legitimate claims submitted by policyholders. D. To limit coverage for certain medical procedures. Correct answer. B. To identify and investigate potentially fraudulent activities. Explanation. Fraud prevention and detection are crucial aspects of health insurance claims management. Insurers use various techniques and tools to identify potential instances of fraud, such as billing for services not rendered or submitting false information. By detecting fraud early, insurers can protect against financial losses and maintain the integrity of the insurance system. Question 115. What are some key ethical considerations in health insurance sales and service? A. Misrepresenting policy terms and coverage details. B. Providing accurate and transparent information to clients. C. Offering financial incentives for policy sales without disclosure. D. Hiding limitations and exclusions from potential policyholders. Correct answer. B. Providing accurate and transparent information to clients. Explanation. Ethical behavior in health insurance sales and service involves providing clear, accurate, and comprehensive information to clients. This includes explaining policy terms, coverage details, limitations, and exclusions honestly and transparently. Agents and brokers should prioritize the client's best interests and refrain from misleading or deceptive practices. Question 116. What consumer rights and protections are typically guaranteed under health insurance regulations? A. Right to deny coverage based on pre-existing conditions. B. Right to file complaints and appeals with the insurance department. C. Right to raise premiums without notice or justification. D. Right to cancel coverage without cause. Correct answer: B. Right to file complaints and appeals with the insurance department. Explanation: consumer rights and protections in health insurance regulations often include the right to file complaints and appeals with the insurance department if issues arise with coverage or claims processing. This mechanism ensures that policyholders have recourse if they encounter problems with their insurance companies. Question 117. What constitutes fair marketing and sales practices in the context of health insurance? A. Aggressive solicitation tactics without regard for consumer preferences. B. Providing misleading information about competitors' products. C. Offering incentives or rewards that do not comply with state regulations. D. Using clear, understandable language in policy documents and communications. Correct answer: D. Using clear, understandable language in policy documents and communications. Explanation: fair marketing and sales practices in health insurance involve using clear, understandable language in policy documents, marketing materials, and communications with clients. It includes avoiding deceptive advertising, ensuring that terms and conditions are clearly explained, and respecting consumer preferences during the sales process. Question 118. Which of the following supplemental health insurance products typically covers expenses related to dental care? A. Long-term care insurance. B. Disability insurance. C. Vision insurance. D. Critical illness insurance. Correct answer: C. Vision insurance. Explanation: vision insurance is a type of supplemental health insurance that covers expenses related to eye care and vision services, including routine eye exams, prescription glasses, and contact lenses. Dental insurance, on the other hand, specifically covers dental care and services. Question 119. What are optional policy riders and endorsements in health insurance? A. Additional coverage options that policyholders can purchase to enhance their base policy. B. Mandatory provisions required by state regulations. C. Discounts provided to policyholders based on claims history. D. Penalties imposed for policy cancellations. Correct answer: A. Additional coverage options that policyholders can purchase to enhance their base policy. Explanation: optional policy riders and endorsements refer to additional coverage options that policyholders can purchase to enhance their base health insurance policy. These riders can customize coverage based on individual needs, such as adding coverage for specific medical conditions or services not included in the base policy. Question 120. What does critical illness insurance typically provide coverage for? A. Routine medical checkups and preventive care. B. Long-term care services for elderly individuals. C. Lump sum payment upon diagnosis of specified critical illnesses. D. Prescription drug coverage for chronic conditions. Correct answer: C. Lump sum payment upon diagnosis of specified critical illnesses. Explanation: critical illness insurance provides a lump sum payment to the policyholder upon diagnosis of specified critical illnesses covered by the policy. This payment can be used to cover medical expenses, living expenses, or other financial needs during the recovery period. It is designed to provide financial support in the event of a serious illness.